All right, let's go ahead and get started. Looks like some folks submitted some questions to that little Q&A thing that I set up. If anybody has any questions at any point in time, there's now a live stream text chat that was created. So if you have any questions, you can just go ahead and ask them there, and I'll get to them as I get to them. As I said, this is pretty much an open forum for people to ask questions about the custom studies. I know we have a lot of folks that probably are not subscribers here and are just looking to learn things. Feel free to ask questions. I'm sure you've seen posts from me on Twitter and are wondering what some of the things that I use are. Just go ahead and ask. I don't think we have a ton of questions. Maybe people will hop on and they'll have a lot of questions that maybe they didn't want to submit on the Q&A website. So I guess I'll just get started with those. And if people have questions at any point, again, just ask them in this live stream text chat. So, all right. Just pulling up the questions. So here we go. Again, just two questions that people submitted. The first one, which is around the Jobo pinch and just understanding when to enter into a trade. What does the pinch specifically mean? So I'll bring over the chart for the pinch onto the screen here. And I actually use it over 3 different time frames. So I'll bring over the other 2 time frames that I use. This first chart that we have here on the left is a 5,000 trade chart. Or sorry, a 1,000 trade chart on the left. The one that I'm bringing over is the 5,000 trade chart. Okay, and then the last one, which is the 20,000 trade chart. So I actually have a video on the website, if you're a subscriber, that teaches you this setup. I go through a few different examples on how to trade this setup. Just talking about the pinch itself, what it looks like is these backgrounds, right, that we have here. Let's see if these charts are in sync. Oh shit, I don't have them synced up right now. Let me just go ahead and change this real quick to 4. All right, so now they're all in sync as I scroll around. So the Jobo pinch is a study that I didn't come up with. It was somebody else who we're just gonna call Jobo. That's not his real name, but that's what he goes by on Twitter. And he came up with this trading strategy, which essentially identifies setups where the market's really oversold. And he really only trades it to go long, but you can, if you invert the chart and do a few other tricks, you can turn it around to look for shorts. So we'll just talk about the long scenario here, right? And the Jobo pinch is just these backgrounds. So the study itself identifies, again, oversold conditions, and then when it starts identifying the right conditions, it'll start painting these red backgrounds. I know I have these other little squares on the chart, which should probably be just removed because they just add a lot of noise. So now we don't have the squares. Here's just the moving average, which is this blue line. But if we just focus on these backgrounds, the red background is telling you that we're now pinching, right? And it's identifying this oversold condition. And then once the background paints, it can go to like a yellow state and then a green state. And then the green state is essentially when the study tells you to go long. So this is a very great, like, easy study for people to start out with and trade. The reason why I bring these 3 different time frames is because the best setups for the pinch occur when you have this confluence of 3 different time frames or more, right? I like to use the 1,000 trade chart, 5,000 trade chart, which is right in the middle, and then the 20,000 trade chart. And ideally, you want to identify when all 3 time frames are in this state of a pinch. I'm not sure if we can find maybe a good example. Usually on this 20,000 trade chart, so if fortunately I have the volume profile here, let me just hide it so it's not in the way. All right, so say we're pinching right through here, and we're aware that the 20,000 trade chart is pinching. We're waiting for the pinch to also occur on the 5,000 trade chart and on the 1,000 trade chart. And the idea here is that you're trading off of the larger time frames, but your entry is on the shortest time frame. So you'd want to wait for the 1,000 trade to start painting green, and then that is your time to go long. So you go long somewhere on this candle. I'll zoom in a little bit so it's more so it's easier to see this green background. So you just go long on this candle, and then you put your stop on this swing low. In this case, say you got the worst possible fill at the very top of this green candle, your stop would be about 4 points. And we're looking at the E-minis. I'm sure that's what most people trade that are joining here. And I mean, this trade worked out, but there's other chances that, say, this blue bar used to be a green bar. So this is a failed pinch. You go long at some point in time in this green candle, say you get the worst possible fill again, you put your stop down here, and you probably lost about 4 points again, 5 points in this case. So again, but you know that likely there's just another setup around the corner where the pinch will release, and then price will just continue to go up. So, okay, you lost 5 points the first time, you try again, and then this time it works. And I mean, I could count how many points we have here, but I'm sure, this ran for a very, very long time. Not that necessarily you would hold it for that entire time, but the point is that you would make money on this trade, and the previous loss would have just been a wash. All right, so hopefully that explains the pinch for the most part, at least high level. If you have more questions, just feel free to ask them. I use it also in conjunction with the linear regression study that I created. So I'm mostly looking at the 5,000 trade chart because the 1,000 is a very short time frame, 20,000's very large time frame. So I like the 5,000 trade chart, and I look at the linear regression from all 3 all in one chart with the pinch of the 5,000 trade chart. And again, the best conditions are where all time frames are severely oversold. The pinch has detected it, and also the linear regression has detected it. In this case, I think the only one that was really oversold in terms of linear regression was the 1,000 trade chart. I think these other 2 were just a little bit away from their mean, right? So, all right, I'll just leave it at that. Hopefully that helps. Let me just check on questions here. Yeah, the video is recorded. As long as everything goes well, I will be posting it on YouTube at some point in time. Okay, awesome. Yeah, so Dom, let's just talk about these linear regression. So obviously Sierra ships with its own linear regression, right? And in fact, we can just draw it on the chart here. So if we go to tools, God, I forget exactly which one it is. Price retracement, maybe? Oh no, linear regression right here. So here we go. So the linear regression that ships with Sierra is this, and it only gives you one standard deviation. I mean, you can change it to the first, second, or third, or whatever you want. But if you want to see all 3 standard deviations together, you have to add 3 versions of this study. What the Sierra charts study also doesn't give you by default is this historical view of what the linear regression looked like as price was moving over time, right? You can only really see the very latest information, which is right here. So you can see price is close, or at least halfway to the first standard deviation on the bottom side, right? Like negative 1. So it's about halfway there, maybe just eyeballing it, negative 0.5, right? So that's a real difference, is that I created this study that you can see the historical linear regression, and you can see multiple linear regressions all in one view. And the nice thing is that you can also overlay this bottom chart onto other charts. So you can just copy it over here. And this is really how I use it. One of my favorite setups, which is actually pretty hard to trade when you're actually trading it. But if the market's really oversold or overbought, you'll find these conditions where, let me just go right over here. Oh, and actually my 1000 trade chart doesn't have enough data. So let's see, let's just do 60 days. Because you can see it's a little empty over here. But if we scroll back, let's see if we can find a good setup here. So we obviously sold a lot through here. Actually, my 5,000 trade chart also doesn't have enough data like the 20,000 trade chart. But so the point that I'm trying to make is that you want to find these scenarios where all three are close to either -3, so the third standard deviation, or +3. And these conditions are where the market is highly overbought or highly oversold. And that's what's going to create a good opportunity for you to enter into a trade. And this is just a simple mean reversion trade. So that's how I like to use it. Hopefully these charts load soon so I can show you the setup here. But I got all these market depth files that it's got to go through and load. Okay. And then I got the tick. It's a pretty heavy chart that I have here. All right, let's try this again. Okay, so this is pretty much what I'm looking for. Is you have a scenario where the 1000 trade chart is below its second standard deviation. Ideally, the 5000 trade chart would also be below its second standard deviation, and then the 20,000 trade chart as well. Through my website, I actually found like a good spot where this happens, because this doesn't happen very often. You'll sometimes get this opportunity about once a month, sometimes 2 or 3 times. It just depends. But you have to, I always trade these setups because they're such good risk reward scenarios. But they're hard to trade because you'll often, you know that you have to take a little bit of heat. Other times you can trade it, which was just a lot easier, where you'll be looking just potentially at just one time frame, and it's highly overbought potentially. This one didn't get to the third standard deviation, but when they do, you just want to look for this reason of the linear regression, and potentially another reason for something else that you have in your trading arsenal, right? Maybe it hit a level or whatever, and then you'd want to go in with a short. Hopefully that explains it, Dom. So is this indicator like a linear regression on historical linear regression? Yes. Yeah. Yeah. This is giving you the historical linear regression, which is what I was explaining that you don't get with Sierra's study out of the box. So targets for the pinch in terms of where to take profits, I don't, right? I think it just depends on the type of time frame that you're trading. So the setup that I was giving you guys earlier, where you have all three pinching, right, from the 3 different time frames, you're essentially trading one of the higher time frames. You're only using the shortest time frame to get into the trade and to set your stop. And then you're looking at the other 2 time frames for a larger move, essentially, because the shorter time frame is going to have a lot of swings up and down, and you simply just don't want to focus on that shorter time frame. So as an example, if we go back to this one that we were talking about earlier, that happened on the Thursday overnight session, right? So we're looking at the chart on the right. This blue background means that it's an overnight session. That's just how I have my chart configured. And we were pinching on the 20,000 trade chart. So, I mean, this is super early in the morning, so I didn't trade this. But if this would have been during the regular trading session, I probably would have tried this long right here, would have gotten stopped out, maybe -5 points, maybe less. And then I would have tried again. Once I take this trade in, I set my stop. And what I like to do is I just stop looking at the shortest time frame. Because what will often happen, I mean, this one went pretty much straight up. But sometimes it'll come up and down and up and down and up and down, and then it'll finally make the move that I want it to make. But in that time, it shakes me out, and then the move happens. So what I prefer to do is I just close, I just minimize this chart, I don't look at it again, and then now I'm only looking at the 2 higher time frames. And if you're looking at these 2 higher time frames, you probably got in somewhere way down here, right? And now you're just seeing the candles build higher and higher. So just keeping you in the trade. And what I do is I also look at the reconstructed tape to make sure that there's still buyers buying the market. So it's a constant observation, right? You have to make sure that there's going to be continuation, and I'm giving you the stop of just using the low, but if you're looking at the order flow, it really helps you determine if you want to stay in the trade or not. So yeah, I hope that helps. Okay. Yes, Ming, definitely wait for the shortest time frame to go green to enter into the trade. I think once you're very, very comfortable with the pinch and with order flow, then you can start front running it. But it's just so much simpler to let the algorithm of the study tell you when to get in. I mean, I've optimized it so much so that it tries to tell you as early as possible and whenever it's as safe as possible to get into the trade. All right, so let's go back here. We got a few more questions. So let's see, we answered this one on the pinch, and I think somebody else submitted this other question. So what is the best way to use the delta divergence indicator on the footprint chart? Okay, let me just bring over my footprint. My footprint's really busy, so I don't know how helpful this will be. It always feels like when you're looking at somebody else's chart book, it looks like an alien spaceship command control center. So let me see if I can just clean this up a little bit. Otherwise, I don't think anybody's going to get anything out of this. Okay. Let's see how this looks. All right. There's still a lot of drawings that come from other charts that get placed on this chart. It would just take me longer to remove them. So we'll just look at, it doesn't really matter that it's a footprint, right? the divergence detector for delta, all it really needs is the open, high, low, close of price and the open, high, low, close of delta. And we have delta down here in this chart, or in the subgraph down here. And we have price up here, right? So I'm zoomed out. The nuances or the things about the footprint are completely irrelevant for how that divergence detector works. So the divergence detector is plotting these arrows, these green arrows, and then there's these red arrows over here. You can see, I mean, often it works, but there's also other times where it just doesn't work. If I scroll over to the right here, I saw a few examples, right? So right here, it's price just continues going down, and you lose money if you're trading this. Of course, it's the closing period of the day for Friday. So I mean, the way that I think of the closing 30 minutes is just all the rules that you know about the market are just gone out the window, and anything can happen. So if we just scroll back a little bit earlier in the day, there's some pretty good setups right here. And the way that I like to trade the divergence detector is by entering into the trade after the candle closes where the divergence plotted. Sometimes I front run it in terms of not waiting for the candle to close. So if we look at this example right here, ideally you would wait for this candle to close and then this new candle to start forming, and then you would enter long into the trade, and then you put your stop again on the swing low. I just like to tell people to just use the swing low or swing high because it's very simple. You don't need to think about it very hard. Once you start getting comfortable with order flow, then you can start exiting the trade earlier or entering to the trade earlier as well. All right, so I think as an example for this candle right here, like if you would have entered on the opening of this candle, you would have put your stop right here, and then you get stopped out. It happens again, and then you make money. So again, the study is trying to, I think over time, if you are playing these trades, because these are essentially trade entries, right? They're trade signals. And if you're trading them over time and over time, you're really going to get comfortable as to which ones you should take and which ones you shouldn't take. I mean, I make the mistake all the time that I take ones that I probably shouldn't take. But over time, I've found these to be profitable for myself. So let me just go back to this question, make sure. I feel like I answered this question. I don't know if there's more to this question that anybody wants to ask. Let's see. What are the stars indicating? The stars are exhaustions. So yeah, we have one right here and here. They often happen whenever stops get hit. And it's actually, I found this to work a lot previously, and it still does, but it actually works a lot better when you see two exhaustions back to back or within a few candles. And that's essentially how I'm trading them nowadays. Whenever you just see one, I'm aware of it, and I just wait to see if I see another one. So let me just scroll back, see if we see a few different ones. So these ones are kind of back to back, sort of close to each other. These two are as well. What really happens in the market is that you get stops that get hit. It runs through a few prices on the book, but then no other trades really happen on the other side, right? So if sellers get stopped out, you're going to get a bunch of buys, right? At the very top. And usually you want to trade these exhaustions at the extremes. They don't really mean much to me in this little range right here from this top to this bottom area. So these two I would just ignore, even though the second one, played out well as a short. I just would have ignored it. What I like to see is the exhaustions happen at extremes. And that's when I like to get in long, so the green one would indicate to go long, and then the red one to go short. And usually the way that the market works is just you hit the stops, and quite often you also get a reversal. So that's the mechanics behind it. How do I know when stops get hit? I mean, you can never know for sure, but if we zoom in, I mean, you can see it here, and you can also see it on the tape. So you see how at this top right here, you only have contracts trading on one side. I'll zoom in a little more. So you have only contracts trading on the right side. And then on the bottom, you'll have only contracts trading on the left side. That's usually a pretty good indication that stops were hit, and that was it. Right? Nobody else got an opportunity to trade on the other side of the market. And often, I'll just move this and go to this time frame on the tape. So you can just minimize this. Oh, I think the market's opening now. So if we look at the tape, let's see. Kind of curious where we're opening. We'll look at that in just a second. So this is, there's actually like a little star right above here on my footprint. But if we're looking at the tape, I think the star actually plotted right here. And you can see, I mean, this is just how stops typically look on the tape. You'll get bubbles that go from a larger size to smaller size and smaller size. And they usually come in a little group. So this, to me, is what I would think of as stops getting hit. It could also just be buyers buying at the very, very top, hoping to push price higher. But likely what's happening, it's just that somebody had stops from this little range in this area, and then they just hit the stops. And likely they just triggered other stops, right? So hopefully that makes sense. Let's see what the market looks like right now. So opened right here, big sell, big sell. This is the ES tape on the top left, the reconstructed tape. The one on the right is also ES, but it's looking at shorter time frame, or it's not shorter time frame, but shorter number of contracts. So it looks from contracts, I want to say 1 lots to 34 lots. And then the one on the right looks at 34 lots and higher. Then we have the NQ tape bottom left and the Russell tape on the bottom right. Let's just watch this for a minute here. I mean, one nuance right away is that you have two. I mean, this large cell by itself is interesting, but I think what's more interesting is that another one came. Usually this is pretty large size for overnight. So in my mind, I would be thinking the auction's going to be lower. It may trade higher as it is right now, right? The order happened down here at around 51 or 52. And now we're trading at 54, 55. I mean, these players that can throw a market order or 400 contracts into the market can handle some heat. So in my mind, I'm looking to likely get short. I'd still be observing order flow and seeing if buyers are coming in. But we saw we see a sell order also at the very beginning. So there were more sellers than buyers at the very beginning, opening in NQ and ES. And then we saw another player come in with large order flow, only on ES. We saw a little bit on NQ. So I'd be looking to get short and for the auction to be lower. On the smaller tape, you can see some, I don't know if it's an iceberg order right here. You saw a lot of sellers and prices not moving. You're also seeing it on the other side too, which is interesting. So right here, buyers broke a few ticks. Sellers still can't get it through this little zone, 54. And you can see that some large sells, not large, but I mean, well, I guess this one is large because it's 100 lots. It just looks small compared to this one, but obviously 100 lots is good size, and you have a 60 and a 74, but it's getting absorbed at that level. So now if I'm short or looking to get short, I may want to take a pause and see what happens after we cross that level. Or potentially let price float up more, then get short with the expectation that we would try again, that shorts would try again and get through 54. I don't know if this is 54 or 53.75. Yeah, it is 54. All right. We'll get back to the current market. I just want to get through some more questions. I'm going to go through the questions on the website first. On the Q&A, and then I'll get back to Discord. So answer that question. Let's talk about this one. So I mean, this is a great question in terms of how you enter trades using the market profile and the footprint. I'm going to just table this one and maybe answer it towards the end because it's not related to the custom studies. All right, so we'll just leave that one here for now. I'll mark these other two as answered. And the first one, do you have detailed demos on how to read the profile chart and footprint? Same question, same type of question. So I don't have them. I don't have that because, you know, I've built these custom studies, 15 custom studies that you can use and set up in CR charts. That's what I have videos on. I don't have videos on teaching you how to trade anything else. Maybe one day I'll get there, but that's just not my focus right now. Okay. So now I'm just looking through Discord, seeing the questions that people have asked there. Dom, so what are the standard settings for the reconstructed tape itself on Sierra, or is it only available with the study that I built? What you're seeing right now, you cannot set up by yourself on CR chart. You have to use a custom study. There's just no way to do it, right? Like usually the regular tape looks something like this, and that's all you can get. CR chart does have a quote unquote reconstruction. God, I can't remember how to show it up. Oh yeah, it's this drop down. So they allow you to combine records, but it's not the same thing because they'll only combine them at the same price or same type. But there's a lot of nuances to combining them correctly. And also in my, even if it worked exactly the same as my custom study, which would be fine and great for people, what you're not getting is the visualization of seeing it in a chart, right? You would just see the combined trades in this regular view for the time and sales versus this bubble chart that has the lines and all the other stuff that I've added. So just going back to this, I think it'd be cool to see. It'd be great to see some sellers stepping in. We're seeing some sellers, but I mean, it looks like buyers are just pushing them now. And potentially, I think if we get above the high, or like the open, essentially right here, we could potentially start seeing a short squeeze. We saw the iceberg order, and then just sellers couldn't push it any further down. They tried again. You can see the iceberg order. You can see the iceberg order right here. They tried, and then they just ran out of bullets, and then price went up, which is what happens. And that's why you have to be careful if you're targeting an attack and like going through the iceberg orders, because especially as a short, I love playing this on the other side. If I see an iceberg order on the offer, just because I don't know, the bulls tend to always win. And what would be interesting right now is to start seeing some sell orders, some sell order flow to try again and try and attack this little area. Once we get through it, which we will eventually at some point in time tonight, what's interesting is using that level as an over under, like a line in the sand. That's usually what I'll do with iceberg orders. All right, next question. Trader 9 on how to set up the reconstructed tape. Again, it's just a custom study that I built. You can get through my website. You can't do it with just Sierra chart by itself. Can I please go over the RSI divergence from Ming? I saw this last week. It worked very good. Let's see. So RSI divergence. I typically like to play this on the 1 minute chart, but I don't often play it. It's not really a setup that I look for and try to play often. So, but let me bring over my 1 minute chart here. I also need to clean it up because it's got a ton of studies. Give me just a minute. What just happened to my chart? What's happening here? Oh, it's because of another study. I know what it is. I just don't have enough time to go in and fix it. Well, I don't know why that's working. This is happening. I guess it doesn't matter. I think I do know the issue. I just don't want to. It'll just take too long to fix it. So, all right, RSI divergence. So this is the 1 minute chart. Ming, the way that I would play this is just like the Jobo pinch. You see the alert. You either decide to go with it on the candle that it paints, right? So this red or green or these ones. Or you wait for the next candle. And again, this is not, I prefer to play the delta divergence. Some people like the RSI or the MACD. The MACD just happens less, but the RSI happens quite often. So, I mean, you would do the same thing. You enter into a trade on the next candle. That's the safest play. You put your stop at the low, at the previous low, 3 points. And it either works out or it doesn't. I mean, it's that simple. You know that the alert is coming through. It's the study's telling you there's an audible alert that can make a little ding on your computer, a little sound. So you know to pay attention to it. You wait for the next candle to open up. You go long. You put your stop. And then you're done, right? You just wait for a time where you want to take profits. Same thing here. You wait, you enter short, you put your stop right here, you don't get stopped out, and then it works out. And then these ones you get stopped out, you know, a few times, 2 points on that one, almost 2 points on that one as well. So that's essentially how it's going to work out. You can use order flow in conjunction with this. I mean, that's how I would use it. I would know that the alert is plotting. I would be looking at the tape. I'd be looking and waiting for the new candle to start forming. And then that's what's going to make me want to enter into the trade or not, especially if I'm seeing buyers or sellers stepping into the market, right? So as this new candle starts forming, I want to start seeing buyers in the tape. I just closed my little tape, but you want to start seeing, I'll just scroll over to the right. So at the lows, let's see if we can find a good example. So these are not great because it's towards the end of the day. Just scroll over to the right. Okay, so say you got the delta or the RSI divergence, one of these candles over here on the 1 minute time frame. What I would want to see is buyers like this stepping in. And that's what's going to make me want to go long. If instead you start seeing sellers like in this little area, I'm just going to hold off and wait. Okay. All right, let's see, next question. Omar, which delta am I using? I am looking at, pretty sure I have uptick, downtick. But let me just be sure of that. Yeah, so cum delta, uptick, downtick, volume. Ferv, I'm not sure what question you're asking regarding the DVP tool. I don't even know what that means. Delta volume profile. Yeah, Ferv, if you can ask your question. Okay, you're typing now. Delta volume profile. Okay. Delta volume profile. Sorry, let's go. Well, this is a Sierra chart question. I'll get to it at the end, Ferv. I do know the answer, but I'll get to it at the end. Dom, yeah, I can bring the time and sales up so that you can see what it looks like with the tape here. Yeah, so see now sellers got through this level that I talked about a minute ago. I don't know what happened to my other little chart. Let me just duplicate this chart and we'll bring that little guy back up. I love that small chart. I don't know why I was acting weird. So doing from 2 contracts all the way up to 34. So I like to set it up, and then I'm gonna remove all these other ones. Okay. God, is this how I had it set up? I'm glad I saved my chart book before this session. Feel like I didn't have 2 contracts. Maybe it was something like 5, because now it looks a lot busier than it was before. The point here is that there was an iceberg order and then we got through it. So now we got through this iceberg order, and as expected, so now you want to use 54 as a line in the sand. Like I said, we try to get back above it, and now we're selling. So like I mentioned, I thought the auction would be to the downside, and so far that's playing out. And that's a nice thing about the reconstructed tape, right? It's you're seeing the intention of players as they're putting these orders in, because what you're going to see, and this is what Dom asked, is okay, what does it look like with the time and sales next to it? I mean, I find this impossible to read, but what you'd want to do, if you can do it quickly enough, you want to see how these orders are, because this is going to be the smallest time frame, right? And you're not going to see all the orders that are plotting right here, because this chart, the smallest time frame or the smallest chart is filtering. I think I did 5 contracts, right? So the smallest that it'll show is going to be 5 contracts. But like, for example, this one, I'd love to see a larger order so that then we can actually hone in on it. Let's see if we see one. In the meantime, what I was trying to say is that you can see these larger players stepping into the market, and as I was saying, you can see that they can take some heat. Okay, so now we saw a large buy order. God, it's so hard to scroll down and see this stuff. Let's see if we can find it. So it's probably this little area, maybe right here. Okay, so this green bubble is likely all of these single time and sale orders. So it swept the book, 175 contracts, swept the book. And I mean, if you were to add these all up manually, it'd likely come up to 175. Maybe it's not this one, maybe it's somewhere else, just because it's super hard to stop it at the right time. But yeah, I mean, we saw the sell order, price moved up. You can wait for sellers to step in. It was a little sketchy with that iceberg order, because sometimes buyers can really squeeze the sellers out. But likely you take that short with the expectation that we're going to get back to that iceberg order and try again. Now that we're through it, you use 54 as the line in the sand. And right now a buyer stepped in. And now we're above 54. Now I do not want to be short at all. All right. Dom, what would make shorts try again? I mean, they want to get paid, right? I think, and And likely that large player that threw that 400 lot order, the second one, because the first one usually is a lot of, I mean, that's when the market opens, right? So that's usually a group of orders that just hit the exchange. But afterwards, it is a single player. So this is a single trader that set a 400 lot order, market order into the market to sell. So likely the expectation is that they will keep trying to push the market down. And it's your job to find a good opportunity to get in short with them. Sometimes they just throw the 400 lots into the market and then the market just keeps going down. So you have to kind of assess that situation quickly. All right. Dom, you have some great questions. I think I answered the other ones as well regarding when to get in short. The footprint also really helps to see that absorption and those iceberg orders. But with the tape, with the reconstructed tape, you can really see it because price just doesn't go any lower, and then you just see a lot of the same color at the same price, right? So if I zoom out and I'm just eyeballing this to me just stands out. It looks like a wall. All right, Trader 9. Yeah, so the lines for the tape, these lines right here that you see are automatically drawn whenever a market order hits a certain threshold that you can configure. So if we bring up the chart study settings for this chart right here, there's a study called volume large order lines. It's a pretty stupid name, but that's what I came up with. And there's this threshold right here called minimum volume, and you can set it to whatever you want. So if a market order is larger or equal to whatever number, in my case 900, it'll draw a line. And then whenever it draws the line, it also tells you when it happened. So this one happened, Friday at noon and 11 minutes, and the size of that order was 1,182 contracts. One nice thing that happens with this study is that as days go on, right? So, today is Sunday, but then Monday and Tuesday and whatever, the color of the lines will get lighter and lighter, so that that it's at least easier to see by the darkness of the color which ones happened sooner, or like at least earlier in time. So what I can do here just to show you is I'll change this to, God, I hope this doesn't screw up my Sierra chart, but usually you don't want to use a very low number because Sierra chart does not handle a lot of lines plotted on a chart at the same time. So let's just see how this goes. Okay, actually it wasn't bad. So you can see the one today is bright red. And then there's all these other ones that are lighter in red color. They're all sell orders. They just happened in previous days. And that's what helps you just identify them. There is no right or wrong number for this. People ask me this all the time. It's like, what number do you have? What's your number right now? And there's just no right or wrong number. You just don't want to see too many, right? Because then it's just too much noise and you can't make any sense of it. So when there's a lot of 1,000 or 1,200 lot orders, I'll just change it to 1,200 and I'll ignore all the ones underneath. So it just depends on the market, and you just need to keep every day, just if there's too many, just change it, move it up, move it lower, whatever it is. Have you analyzed anchored VWAP to use with any of your studies? I have no idea what that means. AKO plan. I have no idea what that means, man. Anchored VWAP. I don't know what that means. Spencer, regarding setting up the reconstructed tape, there's no instructions. I need to make a video just for the instructions. I actually recorded one. I just need to edit it and get it up on the website. I want to create more videos on how to trade order flow. It's just not easy. It's kind of the DOM. You have to watch it for a long time. I mean, you guys saw me reading this live and telling you what I saw at the beginning of the market open, right? And it's a story that you're essentially reading. You have to kind of be good at psychology and understanding intentions and reading the story that the market's telling you. I don't know if that sounds stupid, but that's at least how I view it. Right? You have to know that if this seller is still in the market, I mean, they might have just gotten out quietly in some other way, right? But if they're still in the market and the market's floating all the way up here, you know they're in pain. And they're likely getting squeezed out. They're probably offloading maybe some of their contracts, or maybe they're doubling down, and you need to read that. But Spencer, if you can't set up the reconstructed tape, just DM me. I'll help you out so you can get set up. But education-wise, actually, one thing that I'm going to be doing this week, I almost forgot to mention this. So this week on Thursday, I still need to figure out what time. But on Thursday, I'm going to be doing a live tape reading session. So you can join for free. I will be live stream my screen. We'll do it during regular market hours. We'll probably do 2 hours, maybe 3, depending on the market that day. If it's really slow, I don't even know if I'll do it. But you know, I think we're in a good period where markets are not that slow, and there's interesting stuff happening. So I'm gonna do a live session. I may put on trades. I'm not sure. I've done it before with trades. It's kind of a pain in the ass because you have to think and talk, place the trade very quickly over and over, and it's a little stressful. So I'm not sure if I'm going to place trades again, but at least I'll be narrating the market. And you know, you can join for free if you want. I'm going to be doing this on the Pit, in the Pit channel. So I'm not going to be doing this in this Discord group. I spoke with the guys on the Pit today, and they're going to allow me to give everybody here free access to the Pit on Thursday and Friday. So I'm going to be there on Thursday live for 2-3 hours, but you can access all the stuff in the Pit Thursday and Friday. They have live trading rooms. They have 2 trading rooms in there. So you can go and hang out there for free, ask questions. If you like it, I think their current subscription is $35 a month. And I'll likely keep doing this, right? Because I got this whole business started and the studies and the indicators with them in the Pit, and I'm trying to give back to them as well. So we're gonna do it in the Pit, and likely we'll just continue doing it in the Pit rather than in this Discord room. And yeah, so hopefully you guys can join then. I know a lot of the folks here right now listening are from the Pit. Tom, you're hilarious. All right, let's see. Oh, Trader 9. Okay, so you're talking about these lines right here. This is an overlay of the 1 minute ATR. I actually have the 1 minute ATR also on the smaller ES, but we're looking just NQ. And I think I also have the 5 minute on this larger time frame Maybe it's not set up. But yeah, it's just a 1 minute ATR on NQ and the small tape. And then I use 5 minute ATR on this larger tape. It really just helps with positioning and bias. So look, I said I don't want to be short, and now we're trading up. And this is the thing with order flow, is you're short biased for some time, and then new players come into the market. They're actually changing the direction that we're trading in, or they're accelerating the direction that we're trading in, and you just need to adapt. And that's part of the art. Okay. So can you add market depth to the reconstructed tape? Yes and no. I actually have a support ticket with Rsi Chart, because if you haven't noticed, the symbol for the reconstructed tape is, it's got all this extra stuff. And because of this extra stuff, it doesn't map it correctly to the market depth data. You can delete this and just have the regular symbol by itself here, and then you can add the market depth. But then the reconstructed tape won't be as accurate. What I mean by that is this 400 lot order may then show up as 416 or 420 or 25 or 395. It just won't be as accurate. So you need to be aware of that if you want to have market depth right now. Hopefully in the near future they'll fix it for me, but we'll see. I'm just reading through the other questions. Yeah, again with the market depth, I think I want to see it. I've had this discussion with people many times, so we'll see if we can make it happen. Yeah, I mean, I think for the most part, those are all the questions. I'll answer some of the other ones that were not related to the custom studies. I think, for now, I'm going to end the video recording here. Thank you all for watching. If you want to stick around for me to answer these other questions, feel free. Again, I'm going to send out the link for you guys to join the pit for free Thursday and Friday in the morning on Thursday. So watch out for that. You'll just click the link. You'll get added to the pit, and then you can, I'll also let you know what time I'll be live streaming my screen so you can join and ask questions. But again, thanks for coming and making this a good little Q&A session, the first one. I'll try and do this maybe every other Sunday to start, or maybe if a lot of people keep having a lot of questions, we'll do it every Sunday. So just watch out for those messages. All right. So thank you, everyone.